Hey guys, how are you? It's Pete. Yes, change. How about that? Change happens sometimes, inevitably. So, nice wider chart. We've got a blue background, maybe. I'm not sure about that. The white was a little too bright on the eyes. Hopefully, a cleaner sound going on. So, everything's being upgraded. I really probably should have done this a while ago, but I don't like to change my trading routine, so I held off as long as I could. So, here we are. I want to talk about in this video how to handle trades, manage trades when you're in them and taking profit, and all that because yeah, it's coming up. People have been asking about it. I said I'd make a video to try to lay out some guidelines. Um, and besides that, I guess I can mention it after. There's some new things coming. There'll be a custom volume indicator I'll have available on my website, among other things. Okay, I'll get to it at the end of the video. So, handling and managing open trades, okay, open positions. Now, let's say hypothetically we're in a long here. This is not the time of day I would take a trade. It's not really a setup, but let's say, for this example, we're going along here. Okay. If you know my setups, this is similar to an actual setup, even though it's just wrong right now. Now, let's say we just entered the trade, let's say in this area, okay? Similar to my type of entries. All right, so we're in the trade here. Now that's, let's say 80, let's just round it off to 80. Now, stop loss. Okay, I've said this a million times, but I'm going through everything here. So we want our stop loss in a place where the trade setup falls apart. As we know, this bottom can get tested as many times as it wants. If it continues to show strength and accumulation activity, we want to stay in that trade, right? We don't want to get our stop loss hit while it's still setting up and still accumulating. As well as, and you would say, okay, well, why don't we put the stop here, right? Because so many times, not only with 618, but generally, price will overshoot by a few pips when it's testing a support in general. The overshoot, right? The fake breakout pattern. Okay, so you don't want to get caught with that either. And this is where everybody's stops are. Okay, and there's a reason why that happens, right? If everybody's stops are here, I won't get into it, but there's a reason why that will hit. Most likely, it'll hit before it finally goes. Like it can range around, hit a slightly lower price, and then finally start trending up. That's the Wyckoff spring pattern, and it's the same old thing. Okay, so we want to leave, as I say, 5 to 10 pips room. You know what a fake break and a slight overshoot looks like. If we find ourselves down here, then we're getting into the territory of really not wanting to be in the trade anymore. Okay, and again, that's not just 618, but any sort of support resistance situation. Okay, which is typically where we're getting in. Now, if that is too large, let's say that's 50 pips, 70 pips, you've had some really big moves, market's very volatile. You have two options, right? You can go with a much smaller position so your risk is no larger, or you can go with a smaller stop. Now, going with the smaller stop, I would say maybe you want to wait till you have a lot of experience because only in setups that you really expect to play out soon and not test the low anymore would be setups where you would put a smaller stop. Now, what would be telling you that? The balance of supply and demand. If there's still a fair amount of selling that it's dealing with, it may range for a while and you need that. If it's extremely imbalanced and set to go, you could, which I do this maybe 1 out of 10 trades. I barely do this, but usually it's not an issue in the first place with the pip count on the stop loss. But if it is, there's that option, right? Maybe 1 out of 4 times I'll do that when I have that situation. So it's very rare. But if it's very much set to take off, if you understand my method, how to read the chart, and the imbalance is very obvious, and you think that it's just going to be able to go into its markup without having to test lows again, then you have that option. But really, we're sticking to that for 99% of the time. Okay, now targets. Okay, now when you're taking profit here, right? This is what I found works for me through the years. Refining and refining. I have a basic plan, guidelines, and as price moves along, I'm reading the chart and seeing how it's going, and I'll show you what that is. But the concept, before I even show you that, is you don't know what's going to happen, right? There's a good chance if you're in a setup, your probability is to start moving up. Okay, but you don't know what's going to happen. Now, you're going to have to watch what you're going to run into and see how price behaves. Okay, so really what I'm trying to do is play the probabilities, right? So the concept is, if I'm in a trade and the trade looks great, 100% great, what would that be? That would be, for example, the trade just starts moving along. I'm up 10 pips, and it tests daily pivot. It gives a no supply, low volume test, and continues. It did not hit sellers, right? So, all this information, good, good, good. Okay. Then the probability of that trade continuing playing out for you is high. Okay, good. You get information as the trade moves along. But you never really know what's going to happen. Okay, you're not surprised because you're able to read a chart and understand the probabilities that if you're long and you get a sign of weakness, particularly at a level predetermined, that it takes away some probability, right? So we're playing the probabilities as it moves along. If the trade looks great, I want to leave my position on. I want to take only small amounts of profit, perhaps at initial targets. If the trade is struggling, I'll be managing it more actively, and I'll see that this trade is losing probability. As price moves up is when we start to see that, right? So I'd be in profit, but I can react to what's going on. If I get a big high volume sign of weakness while I'm long at my first target, rather than taking a quarter or a third of my position off, that large sign of weakness at my first target, wherever that may be, we'll get to that, maybe I'll take off half or 3/4 of the trade because I see now a sign of weakness coming in, right? Now, people have, it sounds all good, but what I am hearing from people is they'll close too early, they'll overreact, or they're not sure what to do if a couple hours go by and the trade is not moving. So just to address that, first of all, if the trade is not moving and you're in the trade, right? Smart money's still in the trade too, unless you see them getting out, aka signs of weakness, right? So if we're long here at a proper setup and price is sitting around without showing weakness, without showing higher prices getting rejected, the markup getting rejected from supply coming in, again, you have to know how to read the chart. But if you're not seeing that smart money's still in those positions, right? They're in until you see them get out. So there's a reason why they're going to be hanging on to those positions, and for some reason just not marking it up yet. Maybe it's New York news they're waiting for. Maybe it's some later in the day news. It happens to be that day, and you're wondering, why isn't it moving? Why isn't it moving? And that was happening to us last week, where if you had held on to the trades we were doing in the room without touching them for a while, they were all playing out. It was this later in the day thing last week. So it's just the market goes through its thing based on, particularly in these times, July, August, you're going to need a little news to get things going sometimes. So if you have late scheduled news, the trade may not move until then, right? But the point is, again, it's all about, as I say, lockstep with smart money and doing what they're doing. So if they're in the positions, you're not seeing them get out. If you're long and you're not seeing supply, you're not seeing them exiting into up moves, then they're still in the trade and you should stay in the trade. Having said that, if the whole day goes by, it's the end of the day, and you're sitting up 3 pips, and the thing is just not moving, and the markets are starting to close, and it's all over with, you can close most of the trade. You can prematurely move your stop to break even. Off hours, right? Off hours, maybe they're going to reaccumulate, and it's going to pull down even further, right? That's the thing, where once you get into off hours, it could float around. It doesn't mean the smart money's out of those positions yet, right? But they can maybe withstand another little dip where they'll reaccumulate, and you don't want to maybe sit through that, or maybe that will hit your stop loss, right? So once you get into off hours, it's understandable. Off hours meaning 16, 17, 18, 19 GMT. If nothing's played out by then, just leaving the entire position on to go with the wind, during off hours, wherever they may float around, I don't do that. So I can maybe trim it out. I probably would close maybe 3/4 of the trade. It really depends on how it looks. If it looks really good, I'll leave some on. But again, I have no problem closing it if it's completely like no man's land. It's like Asia session's coming soon and it's just not going anywhere. Then maybe I'll close it. Okay. So now as far as if I'm in a trade here, long, we have what? As I say, a good way to think about it is, and if you know the method, it's very easy. Think about where you would go short. If we were looking to go short here, what would be our areas of interest? As I call them, areas of information. We have daily pivot, maybe 50 EMA confluence, right, that meet up. We have monthly pivot. We have high of the day, nothing complicated. And we have previous day's high, right? So this is what we're dealing with right now as far as the obvious levels that would be coming up if we were long here, right? So these levels will give us more information than sort of just random points, okay? And it's all about looking at that information and managing the trade accordingly, right? Get rid of that fib. So And one more thing here, again, areas of information, that is a fib. Now, here's the thing. These may be too small for target areas. They're not necessarily targets, but mark this stuff up on your chart. This is all I need now, and know what you're running into. So again, if we're long and you hit this and I'm up 12 pips, it's not a first target. I usually wait till about 20 pips before I can even touch the trade to keep some sort of risk reward in check. So at this point, I wouldn't touch the trade. But again, areas information. If it tests here, pauses, low volume, no supply, and continues without any sort of weakness coming in, looking good. I wouldn't even touch it, right? Now let's say on the other hand, price moves up to that level. You get, I'm trying to give you, different examples. Now what's the extreme, right? You get the highest volume of the day, right? Whatever. Sign of weakness, right? And this goes on, and you go, and you're up. At that point in time, you're up 5 pips, right? 7 pips. And you just saw the worst possible thing you could see on the trade, right? Just to give you all the different kind of scenarios, make my point. The worst possible thing. At the first point, bam, selling. All right, and we just have to know what a sign of weakness is, which you should know, or check my other videos. So what do I do in that case? In that extreme case, I'm moving my stop to break even. I don't care if I'm up 7 pips or whatever we said we got in here, right? So I'm moving my stop to break even. Why? Because here's the concept. The position size that you have open should match what's going on the chart. So when you got in this position, it was one thing, right? And you took a trade according to those circumstances, and your risk was according to those circumstances. And if you see this, does it make sense to have that trade still on, right? In that full risk amount with this just happening? Is this a situation where you'd want to even be getting in now? Is this a situation that's looking good for you at all? No, absolutely not. So to just leave it there and say, well, I'm already in the trade, it's not looking as nearly as good, but well, I want to make money today, so I'm just going to leave the trade and hope that it all works out. Bad idea. So you have to react to what you're seeing. Okay. Now, having said that, again, one of the things that I see is that people do overreact. Now, I don't want you going, oh, there's an increase in volume and I'm up 12 pips. Now I better close the trade. Oh, it's no good. I better move my stop. It's no good. You don't want to overreact. It takes time to learn how to read a chart. But one thing I could say about signs that you see during the trade that you don't like is it's rare that I'll be in a trade that plays out for me and hits my targets and it's all good, that didn't have some sort of piece of information that I didn't like. It's going to happen more times than not. And maybe it'll test this level and initially show some weakness, right? Some weakness. Okay, an increase over the recent range, some weakness. And it kind of works itself out. It ends up going nowhere and no supply and continues, right? Very realistic picture. So we don't want to overreact. Now, how do you decide? It comes from, again, you're trying to play the probabilities, and you can't do that unless you know how to read a chart. So it comes from practice. I'm giving you the best way possible to read a chart. And you just, the experience will guide you. So it's not an exact science. It's a matter of having these predetermined areas and seeing how price is behaving, and having having the open trade match the situation on the chart. Would it be reasonable? Let's say the volume's a little on the high side here. You're up 12 pips, whatever. It's starting to pull down, and you're saying, I don't like that on my trade. I'm going to close a third of my position. That would be reasonable. Or I'll move my stop to break even. So you got to just start using logic and play the probabilities. Logic. Now let's say you got in on a nice lower area, right? Let's say you got in a little lower, and you can even move your stop to lock in 10 pips. Why? Because we know this is a failed pattern, right? Again, just apply what you know in reading the chart. Not exactly a setup, but you get my point if you know my setups. We start marking up here off the setup area, and we know that the automatic rally, we'll use this as the automatic rally here, really should act as support going forward, right? So you can see a sign of trouble on the trade and say, I'm going to lock in 10 pips, but I'm going to do it below automatic rally, because if price gets here, we're losing the pattern, right? We know about this if you know from my other videos, right? So you got to know what you're doing here. So we'd like to see automatic rally act as support if it gets tested again, and knowing that if it gets back below automatic rally, that the trade is losing some probability as far as the pattern breaking down. So again, if you see something you don't like, right, you can respond to the probabilities as they play out. I hope I'm making it clear enough. Another good method, again, I have my multiple areas of information. This could be 20, 25 pips. I take some profit. This could be my next target, right? Again, if price gets here, I need to see how it behaves. If it gets through this 618 without any weakness, I'm expecting this highly, very likely. If it hits a lot of weakness here, okay, I need to close some more, right? It's based on what I'm seeing. If it's ultra high volume weakness at 618 and starting to come down, I can move my stop here now. I can lock in some pips and say if this thing's coming down off a very high sign of weakness at 618, I'll just get out, right? If it does this weakness and kind of sits around and continues, I'll be able to hang in there, you see? So it's just applying the logic. Once you know how to really, the method teaches you how to read the chart. So it's the same information, all the same stuff you're using to decide to get in, to decide how you're going to manage the trade. Now, another sort of trick is to use the 14 EMA. If you notice in strong trends, if you haven't noticed by now, if you're using my method, the 14 EMA acts as support resistance in strong trends, okay? So let's say I've taken, first or second target, and I have maybe only a third of my positions I'm running. Now I can I do it manually, put my stop below 14 EMA and just inch it up below 14. Again, everything gives you a slight overshoot, but you see the rejections. And if you 5 pips below 14 EMA would have kept you in, and then you get out here or here, right? So that I'll typically only do on my last position that's left on, right? You get the idea. It's the 14 EMA during strong trends is very good, particularly for your last position. Now, when you're mapping out these targets, I did that on the 5-minute because it was just easy to get in there and see, but typically for final targets, now, again, if we're getting in here, which is a typical sort of situation for me, minus the time of day and stuff, I'm looking at this, right? First, second, and third target, okay? Because we're talking about a trending move. You can do a fib extension. You could kind of see the symmetry of the move potentially. You can see what's up there as far as, what it's going to run into. And again, get your information. If we're testing here, it's looking okay. We're getting through it, fine. This is the next area I'm looking. A high here and a high here. Weakness, see how it's behaving, right? If I get through that, I still have some position on. It's new high ground. Now I can start trailing behind the 14 EMA in the 5-minute. I can see how it reacts to key levels and maybe some resistance levels to the left or some larger fibs, right? We have to have all that drawn in so we see what we're coming up against, okay? And typically, so that would be a most typical picture here. That initial target area where I put a quarter or a third of the trade in the bank, a second area and a third area with sort of a trail. That's most of the time it's that sort of approach. But you have to you have to react to what you see. So everything can get thrown off. If I get a climactic volume here, on weakness, I'm not expecting that anymore, right? I'll lock it in a lot of pips below the automatic support of that weakness, right? And once it breaks the automatic support of that weakness, it's technically switching into a markdown type of activity. There can be my stop, right? So it's all logical, playing the probabilities, trying to hang in there. Last thing I'll say is, well, people say, well, wouldn't you make more if you just look for larger targets? Over time, maybe you'd make more. You never know what to expect. You never know what the market's going to do. You have days where there's really not much movement on any pair. And for me, the conclusion has been I'm trying to get the best of both worlds. If the market moves 20 pips and that's all it does off of my setup, then I want to get something in the bank. If the market moves 100 pips off my setup, I don't need to hold out for those whole 100 pips with my entire position. If I catch the last part of the 100 pips with a quarter or a third of my original position, so be it. That's still like a winning trade in itself, right? If you have a third of your position and it goes to 100 pips, closing that is like the size of a smaller trade, like a first target trade, if you know what I mean. It adds up. So, but you hedge your bets, as you say. It's not all or nothing on these targets. I'm not letting a profitable trade, 20 pips and up, roughly, or first, sort of target area and up. I'm not going to let that turn into a loss. And I'm not going to let myself get nothing when this thing gets to that first initial area. The only way I won't touch it is if it just looks really good and it's just not pulling back and it's just like sort of blowing through. Then, of course, I'll just wait and watch. the first target area. What else could I say here? No regrets is what I say, right? We say this in the room with the live sessions. It's the no regret approach. And really, you can't. How do you avoid having regrets when you trade? How do you avoid that, right? I remember those days, and I'm sure a lot of people are still experiencing that. I woulda, shoulda, coulda, right? Oh, look what I missed, or look what I did, look what I didn't do. I shoulda, woulda, coulda. And then what they do is, well, next time I'll do it. Trying to maybe make the rules a little too strict. Well, this time I closed the trade at 20 pips because I saw a sign of weakness, and it was horrible, sign of weakness, but it ended up playing out another 40 pips. Shoulda, woulda, coulda. Next time I'm not going to do that. I'll let it run the 60 pips. And then next time it doesn't run the 60 pips, and you're going, oh, fuck, now I don't know which one to do, right? So I'm sure a lot of people know that one. So you don't let it get you like that. If you're up 20 pips, you put some in the bank, and I'm no regrets. If I take a third of my position off at 20 pips and it hits my break even, and by the way, I move my stop to break even on the first target. Okay, very important. So if I get out 20 pips, a third of the position, it comes back and hits my break even, and then goes up 100 pips the rest of the day, I don't give a shit. It does not bother me. I have no emotional response because that's hindsight. Particularly if my first target showed weakness, right? It's hindsight. Again, if I close most of my trade early because of weakness coming in, and then it plays out another 50 pips, and I have a small position on it, no regrets. I'm not going to go change what I do. It's playing the probabilities. It's like playing the lotto and saying, well, I didn't win, that guy won with his numbers. Next time I'll use his numbers. It's not going to work. That guy won that one time. You get what I'm saying? Every time is different. That's a good example. If a guy wins the lottery, don't do what he did. It's going to be every time's different, right? You got to play the probabilities. So I think that's it. Hopefully that's helpful. That's really all I wanted to explain. Let's see if there's anything else. Have a guideline. Mark up those areas and decide what you're going to do if A, B, C, or D happens. Make a plan. Don't be emotional. That's it. Practice, though, right? The better you can read a chart, the better you can exit a trade. You know what to expect. And just use logic. Play both sides. No regrets. I'm in the trade. I'm up 12 pips. It's the highest volume of the day coming in against me. I'm moving my stop to break even. Break even is hit, and then the trade runs up without me. I don't care, because on another day I'll be taking a 30 pip loss on that. It's ridiculous to regret anything like that. When you're working off a chart, you're working off a chart. It's the same thing where I could say, I took a valid setup. It was a clean setup, and it ended up being a loss, which of course happens from time to time. And it was a really nice setup, and it just didn't work out. Is that a regret? I shouldn't have taken that trade? Absolutely not. I'll do it again and again and again. That's fine. It's just playing probabilities, right? So I don't regret taking a loss if I take a proper setup, right? So no regrets. Okay, guys, hopefully that's helpful. Maybe I'll just make another video about some of the things coming up. But to give you the short version, there's a volume indicator, sort of the MT4 answer to E signal, which will be available at my website soon. We're just testing it, working out bugs, but it's running. It's working great. And then also, I'm going to offer. I'm still working out the details. There's a lot of stuff to work out and see really the best way to do this, but it's just kind of coming together where a lot of people are asking about signals, and I was never really into giving signals. It was more of just, well, I trade live. I talk when I trade, and you see my charts, and if I take a trade, I tell you my trading activity. I was never really into signals, and just sort of doing that whole thing to just who knows who and sending out these signals. But people keep asking for it, and what I'm thinking is really what's been part of what's made me want to do it is there are students who have been with me for some time who are really good at this now, and using the method properly and making money, and they may be involved in giving out these signals. So it's not all my responsibility. That's another thing. I take about 3 trades a week, right? I trade 6-7 hours a week. That's it. London Open Tuesday, Wednesday, Thursday. So to sell it as a trade signal service, I don't think that's really, people would really like that. I mean, on slow weeks, I'll take 1 trade and I'll be fine with that. On a busy week, I'll take 5 or something, but I'm not into, quantity. I'm into quality. So as far as a signal service, I don't know how great, that would work out for people. So that's another thing. Seeing the students do so well with the method now for some time, really showing me they're doing it as well as me. Now they can take it from there. They can do New York session. They can do Mondays and Fridays, right? 8 hours. So now we can end up with 7, 10, 12 signals a week, right? That's more like it. So that is just in the works now. I'm trying to, if possible, have all this stuff ready by September, but we'll see how it goes. So that should be really good. And I've been, just suddenly getting a lot of people asking about signals. I guess the word is out about how well I trade, my high win ratio, and what goes on in the room. I don't advertise ever. I don't do any pay for advertisement or do anything. Even my YouTube channel, I barely, advertise or anything. It's all just word of mouth, and I suppose people are hearing how well things are going. It's steady, it's high win ratio, it's all good. And when the markets are sloppy, we get less trades. We don't start taking losses. We know when to trade and when not to trade, right? So I'm looking forward to that, getting that together. I know there's a lot of people who would benefit from that. Basically, possibly just a trade copier and a monthly subscription. And if anybody has ideas on, what they would like to see, let me know. Right? I'm completely open. But what I'm thinking now is a trade copier, for education, and it'll take the trades in your MT4 that are taken in the master account, and you pay per month, that sort of thing, or every 2 months or every 3 months. So if you have any ideas for that, let me know. If you're using a trade copier software that you like, because we're testing everything and going through this whole deal now. So any suggestions from anybody who has experience, let me know. But I got a few people that I'm talking to, and we'll get there. So that's that. All right, guys. So I finally made a new video. Change is good. Here we are. And looking forward to everything. Man, July, August, we're doing good. I'm on a win streak right now, and we just got into August. So I'm happy because you never know what you're going to get in the summer, right? Even just, low volatility with no trades or spiky, weirdness. So the market's good. I think August will be good, actually. And I think, we're all fine. In the back of my mind, we have the beginning of 2014, which was very slow, very historically low volatility, pretty much. Those days are gone, right? Everything's good. So a great run on the summer. I think I'm on a six trade win streak at the moment. All right, guys. So that is it. Look forward to making more videos, getting more active again, kind of getting bored. And I want to do new things and, do new big things, good things. All right. So see you guys soon. Take care.